The greatest legal scam of all time, Wall Street wealth. Everyone wants to be wealthy and live a life free from financial stress. But since most people lack financial education, they end up investing in avenues that keep them broke or cost them hundreds of thousands of dollars without knowing it. The deceptive Wall Street takes advantage of them. Wall Street has developed schemes and practices that effectively rip off unsuspecting people, including knowledgeable investors. And to make matters worse, they're doing it legally, stealing money from investors. It's time to reveal the legal yet deceptive practices that could be silently draining your investment account, potentially leaving you with less than you expected. In the high-stakes world of finance where millions of dollars change hands daily, it's not about making the right investment choices. You need to understand how Wall Street operates behind the scenes. Legal profit at the expense of Main Street investors. For instance, a hedge fund manager named Michael encountered the dark side of Wall Street's legal deceptions firsthand. He had hired a reputable brokerage firm expecting to pay them a fair commission for their trading services. However, Michael soon discovered hidden charges on trades involving NASDAQ-listed stocks, in which the brokerage firm was making a market. These additional markups, not disclosed to Michael, allowed the brokerage to secretly siphon off huge amounts from his transactions, effectively stealing from him under the guise of legality. This story is a stark reminder that what you don't know can hurt you. Imagine conducting trades, thinking you're being charged a fair commission, only to find an additional markup sneaking into your transactions. Remember, these aren't just any transactions, but stocks your brokerage firm has a vested interest in. Surprisingly, this practice is not illegal. It's just one of the many ways Wall Street can legally keep you in the dark while lining their pockets with your money. Why should brokers and financial advisors conceal any compensation they receive from handling your investments? The answer is simple: they shouldn't. Here is another case: how Wall Street banks rigged markets. According to a Money Watch report, 5 of the world's largest banks admitted to federal charges of manipulating global foreign exchange markets and rigging a benchmark interest rate which affected loan costs. Citicorp, JP Morgan Chase, Barclays, Royal Bank of Scotland, and UBS Group agreed to pay over $5 billion in fines. Evidence showed traders colluded to rig financial markets using activities like a private chat room to manipulate exchange rates between euros and dollars. This revealed a systematic approach to influencing market directions, favorably for their banks but detrimentally to many others. Here's another case: Wall Street fights to rip off retirement accounts. In a report by the Financial Times, how Wall Street is fighting to rip off your retirement money, the absence of a fiduciary rule for retirement accounts such as IRAs and 401ks permits advisors to suggest products that serve their financial interests, effectively transforming advisory services into a profit scheme. The lack of regulation exposes investors, particularly the upper middle class, to exploitation through high-cost funds and complex annuities, eroding their retirement savings. Also, according to Bloomberg, new research indicated that insider trading is pervasive, leading to a widespread belief among Americans that the stock market is rigged. Despite the clear evidence of unfair practices by Wall Street, there appears to be a lack of concern over addressing these issues. So this proves how challenging it is to ensure market integrity and fairness for all investors. The mutual fund and 401k heist by Wall Street. You've probably heard about John C. Bogle, the author of The Battle for the Soul of Capitalism, 2005, and founder of Vanguard, one of the largest mutual fund firms globally. Despite being a key stakeholder in the mutual fund industry, he criticizes the sector for emphasizing salesmanship over stewardship in pushing 401k plans. He also warns 401k investors about the frequently hidden costs and fees of mutual funds, which can significantly eat up their returns over time. Let me break this down using an example from Bogle's book. Assume you're 20 years old today and have started stashing $1,000 in your 401k plan. Now, if you retire at 65, you have around 45 years to work and perhaps another 20 years to live after retirement. It didn't mean you'll die at 85, you might live longer than that. So let's say you have 65 years of investing. Now, if you invest $1,000 with an interest rate of 8% for 65 years, your investment will typically grow to $140,000. The deal sounds good until Wall Street comes in, not to help, but to steal from you. Wall Street will legally steal, on average, 2.5% from the 8% gross return, leaving you with a net return of 5.5%. As a result, your $1,000 investment will grow to approximately $30,000. Now, what happened to the $110,000? Well, Wall Street stole $110,000 and left you with $30,000. This is how the fees they charge compound over time to siphon gains out of your retirement account and into their pockets. They're shamelessly stealing from you in broad daylight. Most people are completely oblivious to this reality. And to make matters worse for you and good for them, they put up 0% of the capital, they took 0% of the risk, but they collected 80% of the return. Well, what about you, the investor? Well, you contributed 100% of the capital, you took 100% of the risk, but you only received 20% of the return. Now you understand why it's the greatest legal scam of all time. You had to work hard to get the capital. You waited for 65 good years, taking all the risk. But what happened? You made the Wall Street pigs fatter and richer. Now that you know the truth, it's time to take control of your finances. How to create wealth without Wall Street. The solution. As an investor, you're responsible for your investment decisions. Nobody cares about your money more than you do, not even Wall Street. And believing otherwise could cost you hundreds of thousands of dollars. The truth is that Wall Street is not working for your best interests. They are working for their own good. Wall Street manipulates investments to make profits. With the help of their clever lawyers, they've figured out how to manipulate the markets to their advantage. It's their business. There's nothing wrong with that. The only problem is that they legally get away with a significant number of deceptions to maintain trust, gaining an advantage over investors just like you. But wait, this information is not meant to scare you away from investing. Nobody has ever preserved wealth or accumulated wealth by avoiding investing. You just need to find investments that won't hit you with compounding fees that eat away at your wealth over a lifetime, like the outrageous fees you get hit with a typical retirement account. Wall Street may not be perfect, but it is the only game in town for paper assets. So, what's the solution? You need to invest in real and tangible alternative assets. I'm not talking about commodities like oil, gas, or silver. I'm referring to real estate assets, such as multifamily properties that give you 4 streams of income, or profit centers, to grow your retirement account approximately 500% faster than mutual funds. If you were to invest that same amount of money into a private equity commercial real estate fund, your money could have grown many times over while decreasing the amount of income taxes you may have paid every year to Uncle Sam. Why multifamily investing? You can make your money work for you. No Wall Street involved, no hidden fees, no more legal deceptions. Just cash flow, equity appreciation, big cash outs, numerous tax benefits. Your investments will rise in value at a faster rate. And most importantly, multifamily real estate investing is a recession-proof and natural hedge against inflation because the property increases in value as the rents are increased, allowing you to maximize your returns over time. Exploring the advantages of multifamily investing, multifamily properties, such as apartment complexes or duplexes, stand as pillars of stability in the bustling real estate marketplace. Investors flock to these havens not just for shelter, but for the promise of steady cash flow. Like a well-oiled machine, multifamily properties churn out rental income from numerous tenants, establishing a more reliable revenue stream than a single-family unit could. This is because the risk of income loss is spread across several units. If one tenant moves out, the others continue to contribute to the overall cash flow. Compare a garden with a single fruit-bearing tree to an orchard. The multifamily property is like the orchard, bursting with the potential of multiple harvests instead of relying on the yield of a single tree. This analogy encapsulates the essence, scalability that's available in multifamily investing. Investors have the capacity to cultivate more income by adding trees or units to their real estate orchard, thereby expanding their harvest or income over time. Now, let's delve slightly into the realm of tax benefits, yet another alluring aspect of multifamily investing. The tax code offers various deductions, such as overall depreciation of an asset and a tax bonus called cost segregation. Overall depreciation acts as a shield to income, reducing the tax burden on the cash flow generated. Cost segregation is a tax bonus which allows for the wear and tear of systems within an asset to be depreciated. It allows investors to account for this wear and potentially reduce their taxable income. Additionally, when multifamily assets are eventually sold, the profits often benefit from capital gains treatment, which can be significantly lower than regular income tax rates, fortifying an investor's wealth. The construction of a financially secure future using multifamily investments is much like laying down a mosaic. Investors place each tile or property unit carefully, with the anticipation that over time, the burgeoning complexity adds not only beauty, but also value. A well-chosen multifamily asset gradually becomes a work of art, delineating a narrative of growing prosperity. Unlocking multifamily wealth secrets means embracing the cash flow, scalability, and tax advantages that come with investing in properties that house multiple families under one or more roofs. Understanding the differences between single-family and multifamily investments, when we compare single-family to multifamily investments, we're placing a magnifying glass over the fabric of real estate investing, peering into the weave that separates the two. A single-family residence, often a lone structure housing one tenant or family, has its charms. It's simple, independent, and can be an ideal start for new investors. Yet herein lies a great contrast. The flexible security of multifamily properties often eclipse the singular prowess of a standalone home. With multifamily investments, you're not pulling all your eggs into one basket, but rather distributing risk across a number of baskets or units. The initial leap into the multifamily arena can be compared to the jump from a small pond to a great lake. The waters in multifamily lakes run deep, with more complexities like management and financing. However, they also hold greater treasures in the depths. While the single-family pond is manageable and approachable, the lake holds the promise of more sustainable and substantial catches for those who can navigate its vastness. Factually, the economies of scale can work favorably for multifamily properties. Operating costs per unit typically decrease as the number of units in a property increase thanks to shared costs across multiple tenants. Repairing the roof on a single apartment building, for instance, can be less per unit than repairing the roof on a single-family home. And with multiple tenants, you also diversify your income sources, reducing the financial impact if a single unit becomes vacant. Why not also consider the aspect of financing? Investors often find that lenders look favorably upon multifamily investments due to their steady income-producing potential. You might find that banks are more willing to lend, and at better rates, for multifamily properties than they are for single-family homes. It's an investment seen as a sturdy, well-anchored ship rather than a solitary yacht. Have you ever paused to wonder if the unique advantages of multifamily properties point towards a pattern of financial wisdom that single-family properties simply cannot replicate? Appreciating the wealth-building potential of multifamily investments. Over time, the power of multifamily investments to construct a legacy of wealth becomes increasingly apparent. The steady rental income they generate can compound dramatically, walking investors down the path towards financial security. With each passing year, the mortgage on the property is paid down, the equity or ownership in the property grows. It's akin to slowly filling a container where each rent payment from the tenants is like a stream of water over time. The volume builds up and the wealth container overflows. The long-term wealth-building potential of multifamily properties is like, planting a forest of evergreen trees. Initially, growth is slow, but given time, the forest becomes dense and vast. A source of continual wealth that doesn't recede with the seasons. In a similar manner, the value of multifamily properties often appreciates over time, buoyed by proper management and market conditions, thus deepening the investor's pockets. When it comes to creating a future legacy, investing in multifamily properties ensures that the wealth created is not just for the moment, but can be passed on, like a family heirloom that gains value with each passing generation. A diversified real estate portfolio consisting of multifamily units can provide for one's family now and secure financial comfort for future generations. To offer a helping hand to beginners, consider this simple framework. Start by evaluating the potential cash flow of a property. Understand the financing options available. Assess the local real estate market for demand and growth potential, and seek opportunities to scale the investment by acquiring more units or properties. Now, this disciplined approach is akin to cultivating a lush garden. Care for it diligently, and you will reap the rewards. Multifamily properties cement a foundation for building a financial legacy with a steady income stream, potential growth, and favorable tax treatment, uniting the learning objectives to reveal a blueprint for wealth accumulation and legacy building. Exciting benefits await those who delve further into the world of multifamily wealth secrets. By understanding the advantages that multifamily investments offer, you are opening doors to a path of financial prosperity. Cash flow, scalability, and tax benefits are not just buzzwords. They are the pillars on which you can build your legacy and secure your financial future. Multifamily properties bring in a steady stream of income that single-family homes simply can't match. Imagine multiple rental units, each contributing to your wealth every month. This reliable cash flow is the foundation upon which you can grow your wealth exponentially. The potential to scale your investments, adding more properties to your portfolio over time, can lead to remarkable financial growth. Tax advantages should not be underestimated in wealth creation. Through depreciation deductions and favorable capital gains treatment, multifamily investing presents a tax-efficient strategy for building your financial legacy. Harnessing these benefits can impact your bottom line, allowing you to preserve and grow your wealth effectively over the long term. By opting for multifamily investments over a traditional single-family approach, you're not just investing in properties, you're investing in a future filled with financial security and prosperity. The knowledge and strategies you gain from understanding multifamily wealth secrets have the power to transform your financial journey. Embrace the opportunities ahead and be prepared to unlock the full potential of multifamily investing. Your legacy, your financial journey starts here.